Good evening. Welcome back to Be Rich. Today I want to talk about what is the collateral damage that has happened after the fall of PayTM. PayTM put its public issue at 2150. It was valued at one time at $16 billion, and when the IPO went out, the valuation at asked was for $20 billion. Today there's been a drop of 58% on the value of PayTM, and PayTM is valued at $7.8 billion, and it continues to fall even today. At the grey market, PayTM was trading at 3000 rupees. So a premium of 3000 rupees for PayTM is where the shares change hands in the grey market, and from there it has collapsed to 902. Some of the marquee investors in the world have lost a lot of money in PayTM. The largest shareholder of PayTM is Ant Group of Jack Ma, which owns 25%. O.C. Shen of SoftBank has also invested quite heavily. He has borrowed. The average estimate of his stock price is at 800 million. The average for SoftBank is at 800 rupees a share. There is also talk that T. Rowe Price invested at $16 billion valuation. That means it is a he bought paid at 1700 to 1800 rupees per share. It's not very clear how much Berkshire Hathaway has paid for this share. Only time will tell us how much it is. But on Friday evening, when the market closed, it was at 902 rupees, and the market expected it to fall further. While there might be a relief in the short term because of a rally, but in long term, there is no doubt that Paytm is headed only one way, and that is down. But it's not only Paytm, Zomato, Nika, Policy Bazaar, Cartrade, all these shares are down nearly 50% from their peak valuation after their IPO. Some of them have started to come to reality and cut below IPO prices. It is certain that most of these companies will trade below IPO prices because just having a technology platform does not mean sales and profits, but they have expenses. So, this has cast a long shadow on companies, technology companies, which want to launch an IPO. A famous company which is going to launch an IPO at this point of time is Oyo Hotels. Oyo Hotels is asking for a valuation of $9 billion. But in my opinion, the site does not deserve a valuation of $9 billion, and it is actually worth nothing because it is basically doing what Airbnb is doing with lot of sales force and stuff. Very little of Oyo's rooms are of high quality and are leased directly by the customer. Most of the time there is complaints that clients land up at the place and the hotel rooms are not there, and the quality that is shown in the internet is not met at the place they go. A simple search in YouTube will tell us about clients' experiences about Oyo. Several hotel owners have gone to the courts complaining that Oyo has not honored its commitment, and there have been several NCLT cases where Oyo had to settle outside court. There is no possibility of Oyo making profits. It is very clear the early investors like SoftBank are trying to exit Oyo at a valuation of $9 billion on most of the cash going for an offer of sale. What is going to happen is most of these promoters will exit at a profit. When all the news was bad, to get confidence, SoftBank owner pushed the founder of Oyo to buy back his stock at a huge price premium with generous loan terms offered by a bank on his recommendation. Oyo is in the business of managing hotels, and the hotel industry has been in doldrums for the last 2 years because people are not traveling for leisure or for business. In fact, last week I did a program which showed that the iconic Madras 5-star hotel, the Adayar Park, is going under the hammer. So, I have also demonstrated how several hotels and restaurants which were iconic in the city of Madras have been forced to be shut down because of the pandemic. The pandemic does not seem to be ending, and so even the current year will not be a great year for Voyo. Companies which basically claim they are technology like Voyo and PayTM have no business idea, have no business model. They have done reckless expansion, and private investors have bought into the story of charismatic founders selling them a dream. The most prominent case is that of WeWork, in which SoftBank invested a lot of money, and finally the IPO collapsed. More and more technology stocks which are planning to go public will meet the same fate. I'm amused to see Zomato, which is nowhere near making profits in its core business, is now talking about starting a non banking finance company. What does a non banking finance company have to do with a company which is supposed to deliver food? These are completely unrelated businesses. Similarly, Ola, as I have pointed out several times, has lost its way from being a car raiding app to delivering restaurant foods and to now trading in used cars. Now it finally claims it is going to make electric two wheelers. With the great brand Bharat, it launched its two wheeler scooter. But so far, deliveries have plagued it, and there has been no delivery problems in Ola. Hero Electric, a small player in comparison, who's not made a big song and dance about its products, has managed to succeed and deliver more than 100,000 scooters in the last 12 months. As Rajiv Bajaj famously put it is not easy to run a manufacturing company. You do not turn out overnight and hope that everything falls in place and you will start making scooters. For all its talk of an all woman factory, Ola has not been able to deliver the promised scooters. Whereas Hero Electric has gone from strength to strength and has now tied up with Mahindra to use their factory to manufacture 200,000 vehicles more. This coming year, Hero Electric hopes to sell 3 lakh electric vehicles, something that Ola can never do. It is better that investors concentrate on such bets rather than trying to run behind technology companies at fancy valuations. Even marquee names like SoftBank and Berkshire Hathaway and have lost money heavily in PayTM. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share, and subscribe our channel.